What's happening, people? My name is Afonso and this is Afonso Analysis, a show where I help you simplify your trading and yet consistently grow your small trading account, because I myself I am on a journey of taking a $30 account all the way to $100,000. So if that kind of stuff excites you, make sure you subscribe to the channel, man. Like this video and click the bell notification so I can notify you as I release a new video. Now, this is the only video you'll ever need if you want to make money trading Forex from today. I'm talking right now. So if making money trading Forex is your style, make sure you watch through the video. Don't skip any part, because I really took the time to simplify this method for you guys. So no fluff, no bullshit. Let's get into the video. The coldest truth about the market is that nobody knows where the market is gonna go. I made a joke the other day and I said, it doesn't matter whether you're Warren Buffett, Jimmy Buffett, or Afonso freaking Analysis. But the point that I was trying to make is that nobody knows where the market is gonna go. We all don't know. The market is all a fugazi, and it's a fugazi for real, because we don't know. We are speculators. We are simply here to speculate. But we do know certain things about the market, because this is a game, right? Think of it as a game. We have rules, we have boundaries, and let's look at these boundaries of the market, because the market is not a chaotic place with candles just moving up and down, right? It's restricted. It can only move in 3 directions. We know this about the market, that the market can either push up. If it's not doing that, then it might be pushing down, and if it's not pushing down, then it's moving sideways, right? These are the only 3 directions that the market can take. So the market can't trick us otherwise. It's not going to start moving in circles or some diagonal shape or something weird like that, right? It has to follow these rules. We also know that when the market is pushing to the upside, it doesn't just push to the upside eternally. It follows a certain rhythm. In an uptrend, the market is going to push and exhaust, making a higher low, push to the upside, breaking the previous high, making a higher high, higher low, higher high, higher low, higher high, and so on and so forth. This is what the market can do in an uptrend. This is a rhythm that the market follows when it's pushing to the upside. So we know if the market is moving to the upside, this is the structure that is going to take. Now, the most important thing to note about this structure is that when the market pushes and exhausts, every time it exhausts, it's giving us opportunities to enter a trade so we can profit from this push to the upside. If we miss this move, if we come into the market and the market is already around here, it's stupid of us to take a trade, right? Because we know that at some point the market is going to exhaust. We don't know when it's going to exhaust, but we know for sure that it won't just push eternally. It's going to exhaust at some point. So if you get into the market and it's already pushing, you need to be patient enough to wait for the market to come back to give you an opportunity to take a buy. When the market exhausts, this is the area that you can take a buy. This is the only area that you can take a buy. Not here, not here, not here, because you don't know when it's gonna push back and give us that exhaustion, right? To give us an opportunity, a raised opportunity to enter the trade. Right? This is an uptrend. It will always push and exhaust, and our job as traders, as speculators, is to say every time the market comes down here, I'm gonna buy. Right? Now, I do want to make this clear. This is not gonna work every time, right? I don't want you to start jumping up and down thinking you found the holy grail here. This is just the structure of the market. If you keep taking trades at this point here, 80 to 90% of the time you're gonna get your trades right, because every time the market pushes, 80 to 95% of the time it's gonna exhaust and push again to the upside. Now, of course, you do get occasions where instead of the market pushing to the upside, it's just going to continue going to the downside, breaking the previous low and doing something like that. But what I'm saying is, if you keep taking trades around this level here, 80 to 90% of the time you're going to get your trades right. Let's look at the downtrend. When the market is pushing to the downside, it's not going to push to the downside eternally. It's going to push and exhaust, push and exhaust, push and exhaust, push, making
lower lows, lower highs, lower lows and lower highs, lower lows, low.
That's just the rhythm of the market. It moves like that. And again, the most important thing is to anticipate this exhaustion, because this exhaustion is where the opportunity to sell is. All we do in a downtrend, we wait for this exhaustion and we execute a sell there so we can profit from this move. Same thing, exhaustion, we execute here to benefit from this move. I don't know if what I'm saying makes sense to you here, traders, but in a consolidation, because the markets can either push up or push down, or it can just simply just go sideways. The market can do something like that, lower high or higher low, and not break the previous high and come back here, not break the previous low, and just keep on bouncing on this zone here. That is what we call a consolidation. Now, in a situation like that, you have two choices. If the market is consolidating, you have two choices. Because I'm a day trader, right? I trade every day. Every day I need to find a trade, because every day I need to make some money. This is my job. Trading is my job. I trade for a living. So you can either ignore consolidations, but the thing is, the markets won't trend every day. The markets will consolidate on some days, and if the markets are consolidating on Monday and Tuesday, that means you're going to be trading on Thursday, Friday, maybe twice a week. That's not me. I'm a day trader. I need to get into this market and get into the money today. So if you want to trade like me, what you do then in a consolidation phase is to sell when the market gets here and buy when the markets get here, so that you can profit from this move on a buy and profit from this move on a sell. You wait for the market. If you get into the market and it's already here in the middle of this consolidation, you need to sit on your hands for a while, wait for the market to reach the top, and then you sell it here to benefit from this move to the downside, and buy it here to benefit from this move to the upside, and again sell to the downside and buy to the upside, and sell to the downside. You get what I mean? Until this changes. Now, I know you're going to ask me, isn't it possible for me to buy here and then the market goes to the downside? Of course it is. You can buy here and then you see the market goes to the downside and kick your stop loss. Now let's talk about this. You just took a trade. Afonso told you that you buy the bottoms and you sell the tops. Buy the bottoms and then the market kicks you out. Now, is that reason enough to start crying like a little baby and start calling trading a scam? Of course not. Of course not. Because if you come into trading with $100 and you're trading a US 30 with a one lot size, that's gambling, because this thing can just hit your stop loss like it just did here, and then you're out of the trade and you blow your account. Whereas me, if I buy the market here and then it kicks me and takes me out of the trade, I'm like, all right, I'm down 2%. I wait for the market to come back and retest, giving me an opportunity to sell, to then profit from this move here, and wait for the market to retest, giving me an opportunity to sell, to benefit from this move here. If you notice, the market broke the consolidation and started pushing to the downside. And in a downside, for every push, we wait for an exhaustion to then attack here and benefit from this move. Wait for exhaustion, attack here and benefit from this move. If you keep your trading this simple, traders, you're gonna be a profitable trader. There is no way to avoid it. Let's look into the charts here so that we can just demonstrate what we're doing there. you can go anywhere, really. You can go anywhere. You just open the chart and you can just scroll anywhere you like, because the market repeats itself every day. The market do the same thing, right? If we look at this example here, let's look at this. The market pushes, let's grab that one, exhaust and push and exhaust and push and exhaust and push. Hang on, let's look at that. Exhaust, push, exhaust, push. And our job as traders in an uptrend is to wait for the market, every push is to wait for the market to exhaust, giving us an opportunity to buy there to benefit from this move. We wait for the market to exhaust, giving us an opportunity to buy and benefit from this move. And then again, same thing, wait for the market to exhaust, giving us an opportunity, benefit from this move. Same thing, exhaust, take a buy and benefit from this move. We do this until the market changes direction, right? As long as the market keeps doing that, then we keep buying the market. Do you get what I mean? Let's look at what the market did here. This is a perfect example of consolidation. Let's say you come in one day, the market is on this phase here, it's just bouncing, it's not breaking to the upside or to the downside, it's just in this zone here. Now, me as a day trader, I don't just say, oh, the markets are not trending today, and I go do some stupid shit, right? When I see something like that, I'm like, oh shit, today I'm gonna be selling the tops and buying the bottoms. If I get into the market and I see that it's around here, I just sit on my hands, right? Wait for the market to get to the top, sell it, wait for it to go to the downside. It's like playing tennis, right? Bouncing to the upside, selling the tops, buying the bottoms, selling the tops, right? Buying the bottoms, selling the tops. Now, is this gonna work every time? Of course not, because sometimes you're gonna buy the bottoms and then the market goes against you and kicked you out. But how many times was I right here before I was wrong here? Because that's the most important thing about trading. It's the numbers. You need to balance your numbers. The idea that you're going to win every time, it's stupid. Get that out of your head. You're not going to win every single trade. You're not going to win every time. You're going to lose trades. Think of it as a business. A business has expenses. And are you going to start crying that, oh, this month I have to pay my rent? You're not going to complain, because you understand that this is business. If I'm selling, horrible example, I don't know why this came into mind, but if I'm selling alcohol and alcohol is finished, or a belly rosé is finished, if a belly rosé is finished, I'm not going to start complaining and say, oh, I have to buy more belly rose. I understand that that's just an expense of the business. I need to stock more to make more. Am I going to start complaining that, yo, this month I have to pay the cleaning lady? Of course not, because that's just an expense of a business. The business needs to be clean and I need to pay somebody to do it. Same thing here. Losses are a part of trading and you need to accept it. You need to accept that you're going to take some losses and you're going to take some wins. Now, with that being said, once the market breaks the consolidation, we don't start crying like little babies and thinking the train has left us. We wait for the exhaustion, because the market now is giving us an opportunity to sell, and then we benefit from this move here, and wait for exhaustion, wait for this exhaustion to benefit from exhaustion, sell to benefit from this move here, until this changes, right? But my point here is that's all the market does. It pushes and exhausts. Let's look for a sell example, right? Because here is just a consolidation. Here is for me, a day trader, who just get into the market and say, oh shit, today I'm just gonna be selling the tops and buying the bottoms. Like a G, you know what I'm saying? Buying the bottoms and selling the tops, and buying the bottoms and selling the top. Like a G, buying the bottoms and selling the tops. Notice we just went into a random place, right? We just went on a random day, on a random price action, and we start just trading. And that is the beauty of trading the way that I do. Just the ability of looking at a chart, reading the behavior, reading what the market is doing, and just making a decision. It's a liberating thing, because now you have a scale.
Because if we're looking at this market here, another example here is we can see at a glance that the market is pushing to the downside. Now the rules when the market is pushing to the downside is we are only looking to sell. We look at the market once and we see that the market is moving to the downside. Immediately we should say to ourselves, today I'm only looking to sell. And the rules of selling is, for every push I need to wait for the market to exhaust, giving me an opportunity to sell here so I can benefit to this move to the downside. Again, I need to wait. If I come into the market and the market is already here, price is already on these levels here, I don't have to do anything. I need to wait for the market to finish the push and exhaust, giving me an opportunity to attack there, so I can then benefit from this move to the downside. Same thing here. I wait for the market to exhaust, attack here, and benefit to the downside. I'm sure you get my point here, traders, but trading can be this simple. It doesn't have to be complicated. It doesn't have to be algorithms and indicators and just flooding your chart with nonsense, really. This is all you need. You just need to walk into the market and look at the chart and start making trading decisions.
Now, of course, there is a lot to consider when you want to make a living trading Forex, right? But this is where you start. Market structure. You need to learn the language of the market before you can even begin to read and let alone profiting from the market, right? You need to know what's going on. You need to know the phases of the market. So I hope this video really helped you guys simplify your trading and just take the confusion out of your trading, because this is why I'm here, right? This is why I started this YouTube channel, to help you get the confusion out of your trading and just be left with a simple market structure. So if you found this video helpful, please smash the like button and subscribe to the channel, man. It really helps me a lot, and it helps to grow the channel so we can reach more people. But otherwise, if you want to know more about the market structure, if you want to know the beauty, the rhythm, and just the art behind market structure, be sure to watch this video here where I go even deeper into the market structure. But otherwise, keep your trading simple and manage your risk properly.